Hello, welcome to my channel, Everything to Know. Here we discuss finance, money, investing, and anything related, and everything in far in between. I'm your host, Moshe, and so I think we should start off by me introducing myself to the viewer, to the world of YouTube. My actual name is Moshe Aharoni. I go by Moshe because no one's going to be able to pronounce my last name unless you're from, you speak the Hebrew or you're from my people. You won't be able to know. So it's irrelevant. My name is Moshe and it's irrelevant who I really am. More importantly is the information that I'm willing to give, right? Or not willing, that I want to give, obviously. But I think it's important to know a little bit about me. So this way we can build trust because obviously I'm just a face on YouTube with, just regular posters wherever you can see them. There you go. Today's actually December 8th. So I think it's important that we just give, here we are. We give some respect to December 7th. December 7th, 80 years ago, it was Pearl Harbor. On Pearl Harbor, the Japanese did a surprise attack on Pearl Harbor, which was a naval base based out of Hawaii. And about 2,000 sailors, pilots, Marines, everyone in the armed forces, 2,000 people died. And that's what essentially began World War II for the United States. We entered the war, and here we are today, 80 years later, free, because of those sacrifices those men and women made. And I think it's important to remember that. Obviously, this is a finance channel, but I think it's important to know that we respect the people who gave us the freedom to make that money and to earn that money without worrying about going to war and worrying about being drafted and all the sacrifices that come with that. I just wanted to get that out of the way, and now that we did, just to let you know a little bit about me now that I didn't say, I'm 36 years old. I have a bachelor's degree in accounting, a master's degree in taxes, and I've never used them. Well, professionally. Use them in for my family, for my family's business, for my personal investments, and just to, it helps. Let's just put it that way. Even though you get a degree and you don't apply it necessarily in a field, it doesn't mean it's a bad investment. But I think it's important to not study psychology or English. Anyways, I'm going off subject here. My apologies, but that's the reason why I do live, because I like to just let it flow. So here we are. The title of this live is type of investment. So let's get to it. The type of investments that we have, well, there are many, right? You can invest in yourself, you can invest in your brand, but I'm going to go into more of the, basic or just the standard type of investing. So here goes. We have stocks and equities, bonds, real estate, cryptocurrencies, commodities, and businesses. Well, startup businesses or even your own business, and that would correlate with your brand, right? If you have an online presence, I mean, basically when you leave your house, you're a brand, right? Your reputation is everything. Don't forget that. It's everything. So let's go into stocks and equities. So stocks and equities are, I wouldn't say I said this, but our man Warren Buffett, this is a great book, by the way, The Snowball Effect by Warren Buffett. He didn't write it. It was written by Alice Schroeder, who basically followed his entire, she followed his life story, his experiences. This book is not just about finance and money. It's not about that. It's more about the man behind it and to understand the psychology of it. Now, Mr. Buffett would say that stocks are basically investing in a piece of a company, in a piece of a business. And I think that's very important because in the last year, we've seen some crazy things, obviously, with the pandemic. Can't go into that. I know YouTube has things about that, but based on what happened in March when there was a lockdown, the entire U.S., all equities, all markets, Dow Jones, NASDAQ, S&P 500, it went tumbling down. And then in March, it bottomed out and it recovered. And during that recovery, there was a lot of money to be made, but it was all short-term gains. I just want to be very, very clear. People who did get rich, it was all short-term. I think that's important to understand because investing is should be a lot more of a long-term mindset. Now, yes, you can speculate, which is basically gambling on a catalyst. So a catalyst would be in this situation that we had a depression-like state. That's where the economy was going. It was going into the mindset that everything was going to be locked down, everything was going to be shut off, and people wouldn't have access to credit, to money, and the government printed. And when they did that, euphoria occurred. People realized it's not as bad as it seems. The U.S. government basically backed up all markets, and the markets went up. And when that happened, that catalyst was a short-term catalyst. That's what forced people to get back into the markets, realizing the valuation was too low, and there was no justification for it. I think the stock market and equities plays more into the entire economy, but when we look at individual companies, it doesn't necessarily have anything to do with the overall economy. It's very important to understand that, because if you understand that a company can make money in any environment, those are the kind of businesses you obviously would want to be in the long term. So I could dive into individual stocks, into ETFs. I'm not going to do that in this video. I just want to discuss the type of investments. And if you stay tuned, if you please, don't forget subscribe and like this button and hit the like button. I will definitely be talking about this in my next video. I'm going to dive into, I think everybody knows about individual companies like Tesla. I mean, listen, if you buy stuff, you know about businesses, and the majority of those businesses are publicly traded. So that's what I'm. In the next video, I'll talk more about stocks and equities. The next investment I like to discuss would probably be bonds. So bonds are interesting. Bonds are very boring, but if it helps to understand the bond market, in the United States, most businesses run on debt. So what they do is they sell a bond, and then they pay an interest on that bond. So it would be, let's assume it's a corporate bond, and they usually go for 10 years. So they would give you 5%, let's say. So you would collect so basically throughout the entire year of holding that bond, you would collect 5%. And if you hold it to maturity, the bond would hold it to maturity means when the bond is due in 10 years, they give you the money of the bond. So let's say you put $10,000, they give you the $10,000 back at the end of maturity. During that time, you collect 5% interest, because you are essentially saying, I don't want $10,000. I'm willing to forego 10 grand by collecting 5% interest on that money for the next 10 years. So it could be a great investment. Usually fund managers, hedge funds, institutions, government, and people who are closer in the age of retirement, 50s and 60s, would probably get into bonds. If you're under the age, it depends. But if you're young, you don't want to go into the bond market. There's no real money there. It takes a long time. Also, it's safe. Obviously, it's safe, because let me be clear. The company's technically indebted to the person who holds the bond. So in this scenario, if the company goes bankrupt, you're safe. They give you back you go to bankruptcy court, you get the principal back, because you're the first in line to get back that money in bankruptcy court. On the other hand, if you own stocks and equities, you lose, and the company goes bankrupt, you lose everything. There's no insurance on that, unless they committed fraud and you could prove it. Even in that situation, it's extremely hard. I'll give you an example. Look at Enron. Enron the stockholders, they lost. Anyone who was holding the stock of Enron, if you don't know what Enron was, Enron collapsed in, if I recall, in 2000, 2001. It was a huge conglomerate. It was invested in many different industries, but the main industry Enron was supposed to be invested in was the energy industry. Anyways, that besides the point. If you held a bond of Enron, you were probably going to get back your money. So that's bonds. Yeah. And I could dive into that more if you leave a comment below and just let me know if you want me to. I mean, personally, it's kind of boring, but it's important as an indicator. I can get into that another time. Just let me know in the comments below. The next investment, which I think everyone knows about, is real estate. Real estate we can't live without, right? Can't live without a house. And I think it's important to understand that I hear a lot of people who are in real estate. You have like this gentleman here, Robert Kiyosaki. This man wrote this book called Rich Dad Poor Dad, and he'll swear on real estate. That's where he makes most of his money. Now, he didn't make his money that way, but I'm not going to go into that. I don't want to get sued by the man. So I'll just say Robert Kiyosaki invested in real estate, and I'll explain the benefits, which I think everyone knows. Real estate, there's one thing, Mark Twain said it best. There's one thing you can't produce more of, and that's land. So if you own real estate, you own the land and you own the asset. You own the building, the structure, you own the structure on that land. I think it's important to know that if you ever do invest in real estate, I think it's important that you invest in your own real estate first. And what I mean by that is if you're looking to invest in a multifamily, or you're looking to buy apartments, you're looking to do flips, there are so many avenues in real estate. You could do flips. You could invest as a small-time investor in a fund. There's also real estate investment trust, aka REITs, and basically they issue shares, and you own a piece of the trust that invests that money into property, into real estate, whether it be industrial, residential, or commercial. The point I was trying to make earlier is that I think it's very important to first have a home. That should be your first real estate investment. Whether you buy an apartment, a condo, a house, something that you can have and live in, I think is a great investment. Now, I understand why a lot of people do say that it's not the best investment to buy real estate. You have guys like Grant Cardone. I have his book somewhere. And he says, no, don't buy real estate, just rent. But when you rent, you're making someone else rich. So I don't think that's the best idea in the world. I think I think it's more important to have your own real estate, to have a roof over your head, and then really that will be your stepping stone. That will be your foundation to the rest of your future investments. All right, let's see what else we got. We have cryptocurrencies. So crypto is interesting, right? We have this huge push in crypto. So let me be very clear. Crypto, basically, this is what crypto is. Crypto is an algorithm that on a block that allows you. Basically, it's an algorithm that was created that can produce this coin, and these coins are exchanged on an exchange, and they're basically traded on the blockchain. So a blockchain starts, and basically that's what allows the crypto. Now, I'm not a crypto expert, so clearly you can hear from the way I'm explaining this, not an expert at this, but essentially what crypto is it's a vehicle to move money from one asset to another. Nothing similar to the US dollar. You get a dollar, you buy a piece of gum, boom. So crypto is the same way. The only difference is no one actually controls it. No government, I should be clear. No government controls it. So it's decentralized. So it's it can be centralized, but it's not centralized around a government body. So the United States, China, Russia, Japan, whatever government you want me to throw out there, they basically have no control over this currency. and it gives the end user a lot more movement, a lot more flexibility. Um, but personally, I'm not huge on crypto. I did invest in it, but it's speculative. So if my investment goes to zero, I wouldn't cry. I know I'm taking a gamble. And I could get more into crypto. I probably will, because I'm probably in the camp that doesn't look at it as a true investment. I mean, it's an investment, but it's speculative. I believe if you can't buy a house with crypto, it's not worth putting a lot of your money into it. I mean, it doesn't make any sense. The next investment would be commodities. So I think commodities are important. Commodities are what basically makes the world go around, right? Whether it be coffee, sugar, I mean, wood, lumber for construction. I mean, you have oil. You know, you got my favorite. You got silver. This silver bar is a 10-ounce bar. It's worth about, I would say today, it depends on, here, I'll show you a screen really quickly. Sorry, give me 1 second. So if we look at the CNBC.com website, yes, you can go on CNBC.com and it will show you futures markets, well, basically any market. So we're looking at the commodities market and see you have the price of oil, $72 a barrel. You have gold, $17.85 an ounce. Silver is $22.41 an ounce. So this should be about $224. Now it's not $224 because there's a premium on this, but it all depends on who will buy it. Remember, we live in a free market. Anyone can pay whatever they want for it. But on a different note, then we have copper. This is a copper coin I just bought recently. I went to Arizona and I was actually looking for silver, and interesting enough, no dealers over there actually have any silver. So yeah, that was I was shocked by that. That was a surprise, but it seems like people are just buying it up. And the last investment, or the last investment I'll discuss, is a startup business, or just any business. Any business you decide to start, or you decide to, like, for instance, if you're born into a business, if you're continuing an enterprise that your family worked on, I would recommend highly to get into it and continue it. Now, you could love it or hate it, but in the beginning, it's a great avenue. It's a great way to start in the investing world. So it's also a great way to learn more about yourself. Now, your family's probably going to be, they might show tough love. They might be a little hard on you, but in the end, they're going to forgive you. So if obviously you don't want to do anything drastic, but I think it's a great way to start on the journey of investing. And what better way to begin is if your family already has something established, because I think today it's very hard to establish something. I give a lot of credit to people who go out there, start their own business, and really push themselves to succeed in starting an enterprise. Because most enterprises, most businesses, it takes 2 years to even show a little profit, let alone any. And I think it's we got to give them credit. So that is my list of investments, and I think I just want to leave this video saying one thing. The greatest investment is yourself. All these books cost nothing. I mean, they're practically, what is this? It's $8, this book. Probably cheaper if used. You probably get it for $5. This book is a little bit more expensive, but the book, we don't care about the book. We care about the information in the book. The knowledge that we can grasp from these books outweigh it in gold. I mean, literally, I don't give away my books. I won't sell my books. My books will stay with me till the day I die. That's how important books are, because it's the knowledge in them. That's what we want. That's why I decided to do this, to give away my knowledge. And hopefully the knowledge I'll give will help you make money. That's really what it comes down to. But more importantly is money can buy you everything. Almost everything, right? One thing you can't buy, happiness. Now, obviously, a broke man will tell you, if I win the lottery, I'll be happy. Yeah, but that happiness eventually it will eventually fade, unless you deep root it into something else, something greater. But I'm not going to go into that right now. Anyways, I appreciate you guys watching my video. Thank you. Please subscribe. Please hit the like button, and I will see you next time. Thank you, and have a great day.